Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to the degree of leverage. This is going to be the first of two problems which will be similar in nature. Get ready. It's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side, calculating a break-even point, the degree of operating leverage for 20,000 units, for 35,000 units, the income statement for a contribution margin income statement, the degree of financial leverage, income statement for 35,000 units in a contribution margin format, degree of financial leverage at 35,000 units, then the combined leverage at 20,000 and 35,000 units. We will go through this a little bit faster because this is similar to a practice problem we have seen in the past. We're going to start off with the break-even point. So that's going to be our formula we've seen many times. It's going to be the fixed cost. So fixed costs divided by the contribution margin. So fixed costs are told to be the 500,000. The contribution margin in units, colon, would be the unit price minus the unit variable cost. And that's going to be equal to unit price, we're going to be saying is the $55. Now we've added a little bit of a twist here in that each unit has a certain amount of pounds, and this might be the case if we're buying ingredients or something like that. Then we got to figure out and break this down to the units that are going into it. So we might say per pound we have 35 cents per pound, and there's 45 pounds are going to go into each unit. So therefore, how much it's going to cost per unit? Well, it's going to cost the 0.35 pounds that we're going to be, or 0.35 cents per pound, cost per pound. And then we're going to say that takes 45 pounds for the unit. So that's going to give us $16 at the cost. So we might have to break it down to the individual units, whatever it's being comprised of there when you're thinking about the input units. Okay, that's going to be the new thing here. And then we got the contribution margin per unit. So the contribution margin per unit, I'm going to get rid of the colon here. Do some indenting, and I'm going to select these three. I'm going to go up top, going to go to the alignment, increase the indenting, selecting this item, then go into the home tab, alignment, increase the indenting. Then we'll do the subtraction problem, this being the $55 minus the $16 for the $39. Let's put an underline under the 16, home tab, font group, underline, underline under the 39, home tab, font group, underline. Then we're going to have the break-even point. So the break-even point in units is going to be then equal to the 500,000 divided by contribution margin 39. That means we need to produce 12,739 units then. Okay, so now we're going to go to the degree of operating leverage, our leverage types of formulas. So remember, the leverage means that the higher the number, the more leverage. Leverage can be good and bad. Leverage can multiply the benefit in good times if things are increasing, multiply the downtime if things go down. To do this, I'm going to hide some cells from D on over to G here, D to G, dig, and then right click, and we're going to hide that. And then we have the degree of operating leverage. We can do a few different ways. You can memorize it at the contribution margin over the operating income, or the contribution margin over the contribution margin minus fixed income, another word for operating income. Or one way to calculate the contribution margin is the price per unit minus the variable cost per unit times the number of units over, that's being the contribution margin, same formula, minus the fixed cost. You can also calculate it an alternative way, which we'll see in a future presentation, not in this one. All right, so then we're going to say that we have the degree of operating leverage. We're going to calculate the numerator. We're going to do this in like a tax return type format. I want to basically end up with the outer column having our numerator, contribution margin, and denominator, operating income, that we will then divide out at the end of the day. So we're going to start off with our numerator, contribution margin. We're going to calculate the unit sold, or we're going to pick up the units sold. Let's just type it in there. Units sold. This is going to be X in the problem, and for us, we're going to pick up the 20,000 units in our problem. Then we'll do it for 35,000 units after this. Then we're going to have the contribution margin per unit. So the contribution margin per unit which is going to be that P minus the VX in our formula up top in the numerator. We're going to have then the unit price, and the unit variable cost. So the unit price then is going to be, once again, that 55. The unit variable cost is going to be the 35 cents per pound, but then it takes 45 pounds, so times the 45 pounds that we're going to need per unit. Let's put an underline there. And then we're going to go say that this is going to be the contribution margin per unit. And that's going to be equal to then the 55 minus the 16. There we have that. Let's format this, selecting these three cells. Home tab, alignment, increase the indenting. Selecting this cell, home tab, alignment, increase the indenting. Then we're going to have the contribution margin then. The contribution margin then being equal to the 20,000 units times the 39 contribution margin per unit. Let's put an underline here. We're going to go home tab, font group, put the underline there. So now we have the numerator. We're going to now work on the denominator in our little tax return type of spreadsheet format. So we're going to say, all right, now we'll look at the denominator. We need the contribution margin minus the fixed cost. Now we already calculated the contribution margin. It's right there. So we'll pick that up. That's going to be the same number. Subtracting out now the fixed costs. So the fixed costs were determined to be, or they're given at that 500,000. So the fixed costs are going to be this 500,000, just straight 500 fixed costs. And put an underline there. We're going to go home tab, font group. Let's put an underline under the fixed costs. And that's going to give us our contribution margin minus fixed costs. I'll get rid of the colon at the end of this thing. Get rid of that. Let's subtract this out then. This is going to be the 785 minus the 500,000. That's going to give us then our degree of operating leverage. And this will then be equal to the 785 divided by the 285. Let's add some decimals here. Going to the home tab, numbers, adding a few decimals. We could keep going. I'm going to stop at 2. We'll round it off to 2. Let's put the underline here. Going to the home tab font and underline. So that's our degree of operating leverage. As that goes up, then that would be a higher leverage as you have that number increasing. So let's think about that same degree of operating leverage now, but with the 35,000 units. So we'll simply replace one number here, now the 35,000 units. Now what I'd like to do is copy this whole thing over to this next item and then change this one number. I can say, okay, well, where's that number going? I can go, where's that going? I can use my items up top to say that number, whoops, I want to know this number. Where's this number going? And let me do it one more time. We can hit this one, and there it is. So there's where the units are. Now this little tracer field can be found in the formulas tab and in these items. I like to put them up in the quick toolbar, which you can right click and add them to the quick toolbar because it's nice to be able to see where things are. I'd like to just copy the entire thing over here and just change that number. So what I want to do is make all these cells basically absolute references so I can just simply copy the entire thing over. So I'm going to say, I'm going to double click on this. I'm going to make it an absolute reference by saying F4, $ before the B and the 3, enter. I'll double click on this one and I'm going to make both of these absolute references. F4, so $ between the B and the 6, and then I'll put my cursor here, F4, and enter. So I'll double click here. Don't need to really do an absolute reference. I don't want to here because these are going to change relative to when I copy them over. And so I'm going to double click here. This one I don't want to change because again, this one's going to change relative when I copy the entire formula over. Only the ones I'm drawing in from the data do I want to keep an absolute reference on or make them an absolute reference. This one again, not being drawn from the data. The fixed cost is, because that's being drawn from up here, so I want that to stay the same. So I'm going to select F4 and enter. This one is not being drawn from the data. This is not being drawn from the data. So now we can copy this entire thing over. And so I could do it this way. I can just copy this whole thing and Control C. And then I'm going to just paste it right here and Control V. And I got everything I need except, notice I picked up some formulas here. So this one, I can use a formula. And note, I used some formulas to pick these up. So what we might want to do to make it a little bit easier, another way you can do this is I can say undo, undo, undo. And then I can say, let's do it this way. This equals this amount, or the name. Autofill that down. Can autofill that down. And then maybe I just copy and paste the numbers. So I can copy and paste the entire number portion. Control C, paste that over here, Control V. And then basically I can take the formatting and copy the formatting by selecting the entire thing. Go into the Home tab, go into the Clipboard Format Painter, and then paintbrush the entire thing here. And then I want to pick up the new units. That's the one I need to change. I want to pick this up to be the 35,000. The 35,000. So now we can kind of compare these two out and say, all right, does that make sense? Now we're at, let's make this a little smaller. So we were at the 2.75 and now we're at the 1.57. The only change being the units. So the units from 20,000 units, now we've increased the units sold to the 35,000. So notice what's happening here is the degree of operating leverage is going down as we have more units. So as we produce more units, sales go up and the degree of operating leverage goes down. Why? Well, the variable costs are going to stay the same per unit, or the unit contribution margin will remain the same, which will be increasing the contribution margin. The fixed costs will remain the same. And remember what we are measuring here. We're measuring kind of the risk related to leverage, the leverage of fixed and variable costs. And as we increase the units that are going to be sold, the fixed costs are remaining fixed. They're staying the same, and we have more costs that are now leaning over towards the variable costs, which means we have less basically leverage overall after the sales are increasing. The further away we increase from basically the break-even point, the less of this ratio we will have. The degree of operating leverage will go down because, again, it's leaning towards now. The costs are leaning now towards the variable costs as opposed to the more leveraged cost, the fixed costs in proportion. Okay, so now let's take a look at the next item, where we're gonna put together the contribution margin income statement. Let's hide some cells in order to do this. So I'm gonna go back to the left. I'm gonna put my cursor on H, left click. I'm gonna be selecting over to P, letting go, right click on the selected area and hide them. And I'm just gonna make the contribution margin income statement. So the contribution margin income statement is gonna be sales. So we'll take a look at the units sold. The units sold, pulling this into the enter column. We're going to start with the 20,000 units here. Units sold, and then the unit sales price is going to be equal to the $55. So the sales are going to be then equal to the 20,000 times the $55. Let's put an underline here. Home tab font group underline. Let's indent these three by going Home tab alignment, increase indenting. Let's indent this one again. Home tab alignment, increase the indenting. Now we're not going to subtract the cost of goods sold because that would be like a normal income statement. This is a contribution margin income statement. So we're going to subtract out the variable costs, which we're going to calculate as the units sold times the unit variable cost. So the units sold, once again, are going to be that 20,000. The unit variable costs are going to be equal to this 35 cents times the 45 pounds that we need. And that's going to be then the variable, let's just say variable costs, could say total variable costs. This will be equal to the 20,000 times the 16. Let's indent these ones by selecting these three items. Home tab alignment, increase indenting, selecting this item. Home tab alignment, increase indenting, selecting the 16. Home tab font group and underline. All right, so then we're going to be picking up that's going to give us the contribution margin. Contribution margin is going to be equal to then the 1,100,000 minus the 315. Put in an underline under the 315, home tab font group and underline. Then we're going to have the fixed costs, which are going to be equal to the 50,000 up top that we had up top here. 50,000 for the contribution margin. That's going to give us then our earnings before interest and taxes, might be called operating income. Contribution margin minus the fixed costs. Let's put an underline under the fixed costs, home tab, font group, and underline. And then we're going to have the interest is given to us, interest, which is given to us at this 30,000, which is going to give us the earnings before taxes. And that's going to be equal to the 285 minus the 30,000. Let's put an underline under the 30,000, home tab, font group, underline. And then we're not given the taxes, but if we had the taxes, that would be next. And that would give us our bottom line earnings after taxes, otherwise known as net income. But we're stopping here at earning before taxes. That's what we need for our purposes. Okay, so then let's go back up top. And we can now figure out the degree of financial leverage at the 20,000 units. Degree of the financial leverage. So for that, we've got the earnings before interest and taxes divided by the earnings before taxes. So that's pretty straightforward calculation. This one having to do with the leverage related to basically finance, a loan, because the difference is the interest, the thing that we're going to be paying, the rent on the loan in essence. So we're going to be picking up the earnings before interest and taxes here, which is going to be equal to that 285,000. Then we're going to be picking up the earnings before taxes, the only difference being that 30,000 of interest, which we're going to be picking up the earnings before taxes. Let's put an underline here, home tab, font group, underline there. That's going to give us the degree of financial leverage, which is going to then be equal to the 285 divided by the 255. Let's put some decimals on this thing. Home tab, font group, or font number group, adding decimals. We could keep going. I'm going to stop at 2, so we'll add the 2 decimals there. So we have the degree of financial leverage, and again, as that increases, of course, like all the leverage ones, that means that the risk is going up, so we've got more risk, but we also have more leverage, which means if we have good times happening, then if this number is higher and we have good times, it could multiply the good times. If we have bad times and this number is higher, it could multiply the pain of the bad time. Okay, so now we're going to go to calculating the income statement. The same thing, but now I want to do the income statement considering we had the 30,000 units. So how can I do that as easy as possible here? I want to copy over the income statement again. So let's see if I can, which ones I want to make absolute references. Anything from my data over here, I want to make it an absolute reference. So I'm going to double click on this, say that's coming from my data. So I'm going to say, let's F4 that one, $sign before the B and the 13. This one's coming from my data, so I'm going to put an F4 on that one. This one's not coming from the data, so I'm going to keep that as is. This one's coming from the data, so I'm going to F4 that one. This one's coming from the data, so I'm going to F4 that one and F4 that one, the 2 items within it. This one's not coming from the data, so I'll leave that alone. This one's not coming from the data, so I'll leave that alone. This one's coming from the data, so I'm going to F4 that, putting a $sign before the B and the 4. This one's not coming from the data, so I'll leave that alone. This one is coming from the data, so I'm going to put an F4 between the B and the 16. This one's not coming from the data, so I'll leave that alone. Okay, leave it alone. Just leave it alone. So now we're going to go ahead and say equals and pick up the names. I'll use the autofill function. We're just going to autofill this on down like so. And then we'll copy the numbers. Let's go ahead and copy the numbers. So I'm just going to copy this whole thing. I'm going to just take those 2 columns, copy that, and then just paste that there. There it is. And then let's go ahead and copy the formatting of the whole thing here. I'm just going to select the entire thing and paintbrush the formatting on over. Home tab, clipboard, paintbrushy, and then scroll on over here and use the brush for painting. And there we have it. Now we just need to change the units. We're just going to change the units to the 35,000 units. So this is going to be now equal to scrolling all the way to the left, the 35,000 units. And I could say that this one, we'll just say this equals the 35,000 units. So we could see what happens there. If we combine these two out, we have an increase in the contribution margin, of course, and the fixed costs then will remain the same. So we have a proportional increase to the sales and the variable costs, increasing the contribution margin total. Fixed costs remain the same, no change to the interest. What's going to be the effect then on the degree of financial leverage? So I'll do the same kind of process here. I'm going to pick up the same formula where I'm just going to say this equals this formula over here, and then I'm going to autofill that down. Same formula. Now let's just pick up the numbers. Let's actually copy the formatting here to get that underline and the decimals. Go into the Home tab, Clipboard, Paintbrusher, and then paintbrush those items here so that when we put the numbers in, we won't have to like change the format of the cells. Then we've got the earnings after taxes or before taxes and interest. We've got the earnings after the taxes. And then if we divide the two out, we're going to say this is going to be equal to this divided by that. That's going to be the 1.2. Notice once again, leverage went down as the sales increased. Why would that be the case? Well, the 30,000 remained the same. But now, when you think about the amount of interest as it relates to basically our earnings here, because we're comparing the item before we're considering interest to the item after interest has been considered, the difference between the two being the interest amount, which is the financing of the debt. There's less of a difference, which would make sense, right? Because if our earnings are going up, if our earnings are higher, then the interest, the financing interest here is less of a factor. So the leverage is going to go down as the earnings go up if there's no other change to basically the financing, because the interest then remains the same. So now let's consider the degree of combined leverage. A couple different ways that we can calculate it. One is we can just simply multiply the two other leverages together. So I'm going to scroll all the way to the left. See, we want to pick up, and let's unhide some cells to do this. I'm going to put my cursor from B to R, put my cursor to left click on B and go on over to R, so burr. Don't put your cursor on the little picture here because it'll mess things up. So put your cursor on like the gray area, right click and unhide, and then we want to be picking up then the degree of operating leverage for the 20,000 units. And then I got to skip over here to the degree of financial leverage for the 20,000 units. So I'm going to do that with a formula. So I'll do that with a formula down here. This is going to be equal to, it's going to take a little bit of scrolling to do this. We're going to go all the way to the left. We're going to be picking up then the degree of operating leverage there times, and then we've got the degree of financial leverage there, and enter. And then I'm going to add some decimals here. So we're going to go to the Home tab, numbers, increase decimals. We could keep going. We're going to stop it at 2. Stop it at 2. That's all we need. That's good enough. And then let's do the same thing over here. Now we got to find those two for 35,000. So this is going to be equal to, I'm just going to use the left arrow scrolling all the way to the left. Do some hunting here, looking for the 35,000, looking for you 35. There's 35,000 degree of operating leverage, that 1.57 times. I'm going to put the cursor back down. So here's your formula up top, and then I'm going to looking for another 35 for the financial leverage. There it is. Found it. And then we're going to go ahead and increase the decimals, Home tab, numbers, increasing the decimals. So there's one way we can calculate it. Another way we can calculate it is the contribution margin divided by the earnings before taxes. Or we could use these percentages. So we're going to do this one now. Let's do that. So to do that, I'm going to hide some cells to get to this income statement for the 20,000 units. So I want to see that one first, side by side, so we can do this calculation. So I'm going to be hiding from V, going to hide from V all the way over to AF, right-click the selected area and hide it. Then I can see this side by that side. There's my income statement. Here's my degree of combined leverage. I'm going to pick up my contribution margin. So the contribution margin, I'll just pick it straight up here, is this, because we've already calculated it. Now, we've calculated it a few different ways in the past. Like you could take, the contribution margin per unit times the 20,000. But we already have it on our income statement now, which is the total sales minus the total variable cost. So let's just use that. That's going to be then the 785,000. Then we're going to pick up the earnings before taxes. Earnings before taxes down here, bottom line that we calculated. Not the number here. I want the name first, and then the number. Number goes on the right. The number goes on the right. That's going to be the 255, and that's going to give us our degree of combined leverage, which is going to be equal to the 785 divided by the 843,750. Let's put an underline here, home tab font group underline. Let's add a decimal there, home tab number group, add a couple decimals. There we have it, the 3.08, once again calculated a different way, which is neat. Okay, so now I'm going to unhide some cells, putting my cursor on T, selecting over to AF, letting go, right-clicking in the selected area, unhiding. And I would like to see now the income statement over for the 35,000 units next to the area that I'm trying to calculate. So I'm now going to hide from AC on over to AI. Right-click on the selected area, and we're gonna hide it. And let's do the calculation over here. Same kind of thing that we did before. And that's going to be then the contribution margin. Contribution margin up top. Contribution margin is going to be equal to the 1,373,750. We're going to be dividing that by the earnings before the taxes. Earnings before the taxes on down below, that's going to be equal to then the 843,750. And when we divide that out, we're going to have the degree of combined leverage, which is going to be equal to the 1,373,750 divided by the 843,750. Let's add some decimals, go into the home tab, font group, adding some decimals. We get back to that 1.63 again. Amazing. Let's unhide some cells. So I'm going to put my cursor on the AA. I'm going to drag on over from AA to AI, let go, right-click the selected area, and unhide. So there we have it. So we're going to go on over to the right now. Obviously, the combined leverage is acting in a similar fashion in that it's as our sales go up, all else equals, total leverage will go down because both the operating leverage and the financial leverage will go down, all else equal. The operating leverage going down because the tilt between the variable costs and the fixed costs are now leaning towards the variable costs, and the thing that causes the leverage are the fixed costs, because those are the things that don't change. And so as we lean towards the variable costs, then the degree of operating leverage goes down, and the degree of financial leverage will go down because as sales go up, the impact and the materiality of the interest amount related to it will go down, lessening the risk for the financial leverage. So we see the decrease in both numbers here.